Hello everyone, welcome to Dragon Charts once again. Today we're looking at a stock that trades in the Hong Kong exchange called Dongyue Group. Ticker number is 189. This type of play is a little bit different than other plays we've looked at recently. There's several types of plays that we teach our students at Dragon Charts. One of the most common types of plays is a breakout above price consolidation, which we saw recently with Satyam Computer Services that we analyzed in the Indian stock exchange. But another type of setup that we like to do is called a pullback play, and that's what we see setting up here with Dongyue Group is a pullback setup. As we mentioned several times before, two of the most common indicators that we use, we like to keep our charts very simple. So two of the most common indicators we use are the 20-period exponential moving average, that's this line right here, and the 50-day simple moving average, this line right here. And these are good indicators of trend. Typically, in a strong uptrend, we want to see the 20-day moving average above the 50-day moving average, which we see here. And when we see a pullback to a 50-day moving average, it usually catches our attention. Now, in this particular case, what we had going on here was we recently had a big breakout above consolidation. If you notice the horizontal line here, we had a base of support for a several-month period, and in March, we broke out above that consolidation. And notice how when we broke out above this consolidation, the stock started marching higher for several months. Now it kind of ran out of gas here at the beginning of May, and it corrected. Now this is normal. Stocks don't go straight up forever. They do pull back along the way, and those pullbacks provide buying opportunities. Typically, one of the setups that we like is the first pullback to the 50-day moving average right here, after the stock has broken out above a lengthy base of consolidation and rallied. And that's what we have here. We see a multi-month rally after a breakout above consolidation, and then we have a pullback. This is the first touch of the 50-day moving average, and typically institutions such as mutual funds and hedge funds like to use that level as a low-risk place to take a new buy position. However, it's important to not jump the gun and immediately buy the stock as soon as it touches the 50-day moving average. We first wait for some price confirmation to make sure that the 50-day moving average is going to hold. Now you notice on May 23rd was the first day that the stock pulled back to actually touch the 50-day moving average with this candle right here, the red candle. And then today, in today's session, May 24th, the stock held that low, held the 50-day moving average, and it actually moved higher and closed slightly above the previous day's high. Now this is a good sign that the stock is finding price support at the 50-day moving average. When we see this type of setup, we like to place our buy order above the high of the previous day. So in this case, we're looking at, if we pull up our crosshairs here, we can see the high of today was $7.74. So it closed at $7.60, but the high was $7.74. So in this case, we would consider buying this stock at a price above about $7.80. So if you look at the trend line, we can draw kind of a horizontal line right across to just above yesterday's high. If the stock moves above that horizontal line within the next day or two, that's our buy entry. We're not trying to catch the bottom. We're not interested in that. We're just looking to take a low-risk entry on a pullback. Now, of course, we always need to have our protective stops in place just to make sure the trend is not completely finished. So in this case, we'd want to have our stop price, the price at which we'd actually close the stock if it went below that level, is just below the low of these 2 days because we have price support. So around the $7 level would be a good protective stop. And the anticipation here is that we anticipate the stock to move back to the prior highs and consolidate and then break out and resume its uptrend that was well established. Very rarely will a strongly trending stock pull back to the 50-day moving average and continue lower. Instead, that 50-day moving average typically provides a low-risk buying opportunity. If you'd like to learn more about the pullback play or the other types of plays we describe in Dragon Charts, please visit us at dragoncharts.com, where we teach traders how to become successful through education.